Debt ratio. What is it and how do we calculate it? So your debt ratio is going to be your debts versus your income, kind of on a ratio. So meaning if you're making, let's say, $10,000 a month, you can typically come up to about, let's say, $4,500 to $5,000 in monthly debt, including your mortgage or housing, in order to qualify for a mortgage. Now, this is not going to include your electric or your car insurance or your cell phone, but it will include any home loans, any car loans, any credit card loans, any student loans, any recreational vehicle loans, or anything that is showing up on your credit. But what people don't realize that might bite you on that debt ratio is student loans. If you're paying zero, that doesn't mean we can count zero on your mortgage debt ratio. As well, if you have an income-based repayment, many loan types do not allow us to count that and force us to use either 1% or a 0.5%, and even sometimes 2% of that student loan balance. So if you have student loans, it's definitely a great idea to have a loan officer analyze that credit profile and your debt to income ratio before you go shopping for a home. But some other things that are a little less common that we're seeing come up in debt ratio are going to be those short-term buy now, pay later type of things, such as Klarna, that give you a 3 to 6 or maybe a 12-month window to pay off an item like an iPad or maybe some AirPods. And then those are coming out of your bank statement, but they're actually now showing up on your credit report. So you're either going to have to pay this off at closing, or in many cases, we're going to have to hit your debt ratio for that payment. Another thing people don't realize hit your debt ratio if you have collections, even if those collections are old or if they've piled up for a little while and they're kind of sitting there, but you've heard that you don't have to pay off collections in order to qualify for a mortgage. That is technically true. But on an FHA loan, we actually have to qualify you as though you were paying a payment at 5% of the balance of any collections over $2,000. So if you have $10,000 out there, we actually have to hit you for a pretty big payment, $500 a month on that $10,000. So if your debt ratio is already tight or you have a large car loan, then this is going to make it really hard for you to qualify for an FHA loan. So that debt ratio can be a real deal breaker. So if you are thinking of qualifying for a home, I highly suggest getting a qualified loan officer or reach out to me. I would love to help you. We do a soft pull on that credit. We analyze your income and your credit profile to make sure that that debt ratio is tight before we pre-approve you. We're actually never going to give you a letter until we've reviewed that income and asset documentation as well as your credit report. So if you have questions about debt ratio, please do not hesitate to reach out. And if you're not in my market or you're somewhere else than Florida, please reach out to your local realtor or loan officer and ask them to give you an analysis of your debt ratio so that you can be best prepared to buy that first home.